Hey everyone, welcome to another dividend stock investing video. In today's video, I'm bringing back the old school. I want to go through 5 strategies that are top of mind for me right now as a dividend stock investor. Many of you who have been around on the channel since the early days will remember that I did these types of videos in the backyard setting of our old home in the Bay Area. Well, right now I'm in the backyard area of our new home in Idaho, so I thought that I would bring back an old school style video where I cover 5 dividend stock strategies. And these strategies are top of mind for me right now in 2022. It's raining outside right now, and I think that's indicative of the stock market this year. It's been quite volatile, but I have an overhang. We're on the covered patio right here, right now, and that's indicative of dividend stock investing, which is a strategy that tends to perform very well even in down stock markets or volatile stock markets. Get ready, everyone, for a really exciting dividend stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone, I want to jump right into strategy number 1. Check it out on the screen right now. This one starts out with a stock chart. I want to compare my top 2 favorite dividend stocks of all time versus the S&P 500. And I'm looking at a time frame of roughly the last 6 months. And so you can see over the last 6 months, the S&P is slightly down, although it's been all over the place, and we've seen some pretty big volatility. That's the yellow line. Johnson & Johnson, my number 1 favorite dividend stock of all time, is up 12.6%. PepsiCo, my number 2 favorite dividend stock of all time, is up 8.72%. And so you can see sometimes when the stock market is surging, sometimes when stocks are going to the moon, as they say, a lot of investors look down on dividend stock investing. A lot of investors ask me, Ian, why do you collect these dividends? Why do you focus on this strategy when I can make so much more money going for growth stocks? We all know that growth stocks in the last 6 months have not performed so well. I'm not saying growth stocks are bad, but what I'm saying is for my personal conservative investing style, where I prefer lower volatility, where I prefer less volatility, I prefer more sleeping at night, a sleep well at night strategy, dividend stock investing works for me. And I think sometimes a lot of investors, especially over the bull market run for how many years now, have lost sight of dividend stock investing. They've lost sight of the value. And it's times like these when things are volatile that it's good to refresh our memories that, hey, yeah, dividend stock investing provides a really great strategy, especially when times are volatile. So as you can see on the screen in front of you right now, I just want to summarize this first strategy, this first thought that's going through my mind these days. And I would say that point B is really important to highlight. Long-term total returns, they're impossible, quite frankly, if the investor cannot stand volatility and ends up selling, ends up abandoning a strategy, ends up putting less money in the market because they're so scared of losing money. And so for someone like me, I don't like a lot of volatility in my stock market investing strategy. I don't like to lose sleep at night. And so for me, dividend stock investing is a strategy that allows me to stick with a game plan for very long periods of time without losing sleep, deploying more and more capital. It works for me. And so the point here is if you're going for crazy returns, you're going in more risky investments, everyone has a different investing persona. But for some people, that type of strategy, it just may not be something that's possible to stick with, especially during times like these. And so that's thought number 1. I want to go on to thought number 2, strategy number 2 as a dividend stock investor. As you can see on the screen in front of you right now, next point is regarding a windfall. And so I have an interesting story to tell. In the early days of my blog, even before I did YouTube videos, I used to write about my strategy. And I have basically a multi-tiered strategy around money. I actually shared this strategy on my Instagram recently. I'll link to that in the pinned comment below. Check that out if you have not been on my Instagram yet. Make sure to follow me there. Now, part of my multi-tiered strategy involved working at companies where you can gain equity in the company and you can be rewarded for your work effort by earning equity or ownership in the company. And in my early days in my career, I worked at technology companies in the Silicon Valley. Well, it just so happens that one of the tech companies I worked at, I wasn't even there that long, but I accumulated some stock and I owned the stock all of these years. Just recently, they exhibited a liquidity event. And because of that liquidity event, I didn't have a huge windfall or anything, but I would say I had a good chunk of change coming through the door that I wasn't expecting, that wasn't part of just kind of normal day-to-day earned income. And so this I would call a windfall of sorts, or a mini windfall. And so again, it wasn't huge, but it was enough that it was like, wow, this is nice, this is meaningful. And so what I did with this windfall, and I'm going to share this on my Patreon. By the way, if you're not on Patreon yet, check it out in the pinned comment below. I have all of my stock trades over on Patreon, and I also share bonus content, bonus videos on the Corner Patron tier, and my stock portfolio percentage allocation on the Corner Patron tier. And I will be publishing an updated stock portfolio soon. Thank you for hanging in there, Corner Patrons. But they already know some of this. They've already heard some of this because I report my trades there over on Patreon. But one of the first things I did with the windfall is I took the money and I deployed it in the stock market, or I'm in the process of doing that at least right now. And so I'm going to be sharing some of those trades in the coming days here over on Patreon. But what I have always found in this kind of situation, and this is something that's going through my mind, and it's not necessarily even if you have a windfall from stock ownership in a company you used to work at. What if you sell a home? What if you get a one-time bonus at your job? What if just something happens, a relative or someone passes on and leaves you with some money? I've been thinking a lot recently about this particular situation. I'm probably going to do an entire video on this situation, but what I would say for like a mini windfall type of situation, which is what I experienced recently with the company I used to work at, my thoughts are, Ian, I got to get this money working for me right away. I've got to get it out of an account that would be tempting to spend the money. I need to almost live and experience the money as if I never received it, because if I have that money, I'm like, oh, I have all this money, maybe I would go spend it on something. But my strategy in these types of situations is just to get the money out of my everyday spending account and get it into stocks. And so what I have found for a windfall strategy, as you can see on the screen in front of you right now, and this isn't a comprehensive strategy, this is more for a mini windfall, but it's okay to earmark part of the windfall for taxes. I actually have a separate account, a bank account for just holding money that may be owed for taxes, and so I partition that out of my everyday savings, everyday spending, so I don't spend it. It's okay to dollar cost average, but quite frankly, I'm not really dollar cost averaging here. I'm going pretty big on the Home Depot and Raytheon Technologies, and in fact I am expecting to increase both positions by about 28% in size. Home Depot, I'm doing it because it's a deep value as a core dividend stock right now in my personal opinion. Raytheon, I'm doing it because I think it's a reasonable value, but what I also want is more exposure to aerospace and defense from a strategic standpoint in my portfolio, because I am so focused on other industries such as CPG. And so again, this isn't rocket science, this isn't some big revelation, but it is something I've been thinking about, and that's when windfalls do come through. I want to be personally more prudent with the money in terms of getting it out of temptation's way so that it can be in the stock market and I don't spend it on frivolous expenses that I don't need. And so that's thought number 2. I want to go through the third thought in the video today, as you can see on the screen in front of you right now. And I want to share some info on taxes. And so this is important because a lot of confusion exists in our community, in the dividend investing community, around taxes. And a lot of investors ask me all the time, Ian, when I reinvest my dividends, do I bypass taxes? Well, if it's in a tax advantage account or a retirement account, yes, in those cases. But for those of us who hold assets in ordinary individual taxable brokerage accounts, who are looking to use that money to pay living expenses, to live early, FIRE or financial independence, retire early at a younger age, those dividends, as they are paid out, they are considered qualified dividends. And qualified dividends are taxed. Now, thankfully, right now in the United States, those are taxed at a more advantageous level than ordinary income. Now, that may change, and I've been thinking about that a lot lately, because it seems that the politicians out there are really going after investors these days, and it saddens me. I'll get to that in a later point in the video today, but for right now, the dividends are qualified, or not all dividends. REITs and MLPs are treated differently, but most of the stocks I own, like Raytheon Technologies, Home Depot, we're talking qualified dividends here. These are taxed at advantageous levels. And in fact, I want to share that on the screen in a minute, but first I want to remind investors that it is taxed. And so if you are reinvesting dividends, or you're just taking them unreinvested and maybe active or kind of not automatically reinvesting them, but selectively reinvesting them on your own, those dividends, they are taxed. And so you have to remember at tax season to have some money earmarked for them. Now, the way I handle this at this point is I'm still working, and so I have ordinary income coming in from a job. I just withhold extra money on my paychecks because I know that will cover the expenses of the taxes of dividends at the end of the year. But once I'm retired and living that financial independence, retire early through dividends, I know at that point there's going to be a partition of those dividends that needs to be earmarked for taxes. That being said, not all people will have to do that, and that's what I want to share on the screen right now. So as you can see on the screen, and I will link to this in the pinned comment, this is from NerdWallet. This is a really helpful article and table, so check out the pinned comment for that resource. But what you can see there for qualified dividends, there are 3 tax brackets. There's 0%, 15%, and 20%. And what's so great is, hey, say you're single and you earn less than $41,675 in dividends per year, and you're able to live off of that amount. Well, actually, you're going to pay nothing. You're going to pay 0% tax on those qualified dividends. And it's if you're married filed jointly, it's up to $83,350. Now, once you get over those hurdles in terms of annual dividends coming in, qualified dividends, your tax filing status on those qualified dividends can go up to 15% or even 20%. But what's interesting about this is, first and foremost, if you're still working and you're bringing in a sizable income, you will be paying taxes on qualified dividends, whether they're reinvested or not. But again, I just withhold extra from my paycheck to handle that. But once you're retired and you're living financial independence, retire early, as long as the tax code doesn't change, a lot of dividend investors, what they choose to do is live a more frugal lifestyle, and they are able to live on the amounts listed here that would qualify them for 0 taxes on the dividends. And this is actually a thought that my friend Sam, shout out, he's one of the community members here who I actually had the honor of interviewing in 2 separate videos in the past. I'm going to see if I can dig those up and link to them in the pinned comment below. But he shared that at one of the PPCE meetups. And don't worry, everyone, I will try to squeeze in some more meetups in the future. It is on the radar for me. But thank you, Sam, for pointing that out, because there's such an opportunity here for dividends to be favorable in terms of taxes for people who can live on those amounts of money that were just listed in the NerdWallet article. And so I want to just show on the screen again in front of you right now to summarize. You can see here that don't forget that dividends can create taxes and save extra for the tax consequences. But what I'll say again is, newer dividend investors, they'll generally just pay the taxes from earned income or save extra from their paycheck. But as the dividend snowball increases, and let's say you build a really sizable dividend portfolio, over time it's going to be important to save a portion of the dividends for taxes. And so that's point number 3 in the video today. By the way, if you're enjoying the video so far, please go ahead and smash the like button. It means the world to me. It's the best way you can thank me here on YouTube. And don't forget to subscribe. I have new videos on the way all the time. And don't forget to click the notification bell so you are alerted as soon as the new videos are live. All right, as you can see on the screen in front of you right now, I have another thought I want to share with you today about dividends. And this is number 4. This goes back to the concept of an emergency fund, and my thinking on this has changed quite a bit recently. And I would say that selling dividend stocks is an emergency in its own right. The way I invest in dividend stocks is so they will never be sold, even future generations. And I have an emergency fund for that. So obviously I have an emergency fund if something goes terribly wrong and I need money right away to pay for emergencies. But I also look at selling dividend stocks as an emergency. And so I'm starting to build a separate emergency fund for that. And so what I would say is, obviously there's always unexpected expenses in life. That's kind of just the basics of personal finances. It's smart to have some kind of emergency fund. Now for younger people, they can probably get by with having a much smaller emergency fund. When I first started dividend investing, I had next to no emergency fund because I was going a little bit more aggressively with my investing. I was not as conservative of an investor as I am right now. I didn't have it. But most people, generally speaking, are going to be well served to have an emergency fund. That's kind of basics. Now, as you can see on the screen in front of you right now, the next point is for dividend investors, I think an emergency fund is even more important, especially as the dividend portfolio gets mature, because dividend investors, the way they win in the long run is just that, investing and holding for very long periods of time. And so if the dividend investor is forced to sell, that is an emergency. I've been thinking about the value of an emergency fund also from generational standpoints. I think when the portfolio does get passed on to future generation, there's going to have to be some kind of emergency fund potentially, because we certainly don't want the future generations tapping into the dividend stocks. It will be better to have some cash at hand to pay for any expenses. And in fact, I've been looking even at products, not only cash products, but even whole life insurance products. I actually am a holder of whole life insurance, and I've talked about that at length on my Patreon. I've done some analysis on that. It's a controversial topic sometimes in personal finance, but for larger portfolios and people who are trying to pass on to future generations, and that's what a lot of dividend investors oftentimes will have. Even if they don't have it now, the snowball will get to that size because of how time and compound interest works. I think a whole life could be an interesting product in addition to cash. But the reason I am speaking about all of this, as you can see on the screen in front of you right now, is, and I guess I'm going to get to this a little bit later, but I want to talk about politics just for a second. Politics these days, it seems politicians are going after tax code and they're going after investors. And I think that tax codes could change. I think that potentially estate tax rules could change. I think it's all on the table right now, unfortunately, in my humble opinion. And so I think it's important these days to have an emergency fund, especially older investors. I'm targeting 20% at this time. To have 20% of the portfolio potentially. And again, there are alternatives to cash. There are products like whole life. There are products like XYLD, which is a covered call ETF. There are cash alternatives, if you will, that can help for this portion of the portfolio that's reserved for emergencies, which is literally, I would say, taxes, real emergencies, and also just preserving the underlying capital of the portfolio so it doesn't get sold, it doesn't get eroded. This is going to speak probably more to the older investors who are following the channel, to those of you watching right now in your 40s, 50s, 60s, 70s, 80s, those types of investors. Please go ahead and smash the like button, put a comment below if you fall into that bucket. But as you get older, your thinking starts evolving, and that's where I'm at right now. And also as the political landscape starts to get really challenging at times here in 2022, and everything is on the table again in terms of tax code, I'm thinking about all of that as it pertains to protecting the portfolio from ever having to be sold. So that's point number 4 that I'm thinking about right now. And the 5th point, the final point that I want to share about dividend investing, as you can see on the screen right now, is all about learning as you go and remaining humble. I would say that as I get older, the more I learn about dividend investing, it keeps evolving. And I think the point number 1 is really important. A lot of us in prior years here on YouTube, myself included, come across as gurus, seasoned investors, so on and so forth. And I'm pretty proud of myself. I've been investing for dividends for well over 20 years now, and it's worked out quite well. But what I would say is what I'm seeing right now in 2022 in our world, at least from a USA standpoint, but also from a world standpoint as I watch the news, we're in a different world than ever before. Things are changing, and it's important to remain humble because the rules of the game are changing. I just talked about emergency fund is more important to me now than it ever was before because the rules are changing, and I personally believe that things with taxes and politics could go bad for investors. But I'm also just reconsidering vehicles that I've written off before, including retirement accounts. I start thinking, hey, what becomes a prime target for these kind of unrealized capital gain taxes, if you will, or kind of politicians just going after money, land grab, how much money can they take? You start thinking probably individual accounts, or taxable individual accounts, brokerage accounts are probably fair game for that kind of thing. But you got to think, what would a politician not go after because it would destroy their career and it would offend too many people? I start thinking about products like 529 college savings plans. I start thinking about products like tax advantage retirement accounts. I start thinking about products like life insurance, even annuities. And so there are other products out there that are on the table for me right now that I'm thinking about that I might have never thought about before. I'll tell you another product I'm thinking about that I've never really considered before is a diversified mutual fund, or ETF, if you will. I recently asked a question about this on my Facebook group. Thank you to everyone who responded with your input. I am reviewing all that input. I'll probably share a video on all of the collective knowledge that was shared there over on Facebook, but I'm considering products. I dismissed ETFs in the past, and I still prefer individual stocks. I'll always go that route. But what I'm saying is now in 2022, our world is changing, our game is changing, supply chain stuff, there's wars, there's all kinds of stuff going on right now that just changes the game. I'm telling you, and I need to remain humble. I need to reconsider stuff I might have passed in the past that I haven't really taken seriously, or I wrote off because our world is different right now. As you can see on the screen in front of you right now, the next thing I want to share is, for so many years, I would say I put a lower emphasis on debt when I was analyzing companies, but now interest rates, they're spiking, and that's not going to change. And so I would say I'm placing a little bit more emphasis now on debt, on the debt stack of the companies that I invest in, and I'm going to skew net new capital towards companies that have lower amounts of debt. All right, everyone, I hope you enjoyed the video today. If you did, please go ahead and smash the like button. It means the world to me. And as mentioned earlier, if you're able to go ahead and subscribe, that really helps as well. I look forward to seeing you in the comments. I do tend to respond to most of the comments. I read them all. I thank you for that. I'm going to see you in the next video. Before that, in terms of a full disclosure, I do own the stocks mentioned today. I am long Raytheon Technologies, ticker RTX, the Home Depot, ticker HD, and XYLD, ticker XYLD. And in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. Today's video, it's just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. It's possible to lose money in the stock market. We all know in 2022, things are going really different than any time in the past. So please consult your licensed financial advisor. I'm just sharing my journey for fun and entertainment. I love you all. I'll see you in the comments below, and I'll see you in the next video.